Hi, everyone. Welcome to another episode of the LATAM Stocks Podcast. I'm your host, Patrick Flood. Today, I'm speaking with Justin Schwartz. Justin is the managing partner of IMPAQTO Capital. IMPAQTO is an impact investing fund focused on early stage startups in the Andean region. He's also the president of EquiCap, which is the Ecuadorian Association of Venture Capital and Private Equity. I think there's a lot of interesting things going on in the ecosystem with startups in the Andes, but it gets very little coverage. So I'm really excited to hear Justin's perspective about what's happening on the ground with startups, venture capital in the Andes region. So let's talk to Justin. Hi, Justin. How are you?
Hi, Patrick. I'm doing well. Really happy to be here.
Yeah, I'm really glad I get to talk to you today because, like I mentioned before we hopped on, really interested in the Andes, and I think it's a fascinating region that gets almost no coverage from a finance and investing perspective. So to get to talk to you, on the ground in Ecuador is exciting. So before we get into the ecosystem stuff, can you just give me a little bit about your background? Where you're from? How did you end up in Ecuador? What did you do before Impacto?
Sure. So I'm originally from the San Francisco Bay Area. Grew up there and had started my career on the East Coast of the U.S. working in Boston with Fidelity Investments. I was a research analyst looking at public companies, public equities, and spent close to 5 years doing that. And had this interest in kind of taking that skill set, the investing and finance skill set, and applying it to entrepreneurship in emerging markets with a social impact focus. Kind of some of these ideas floating around in my head. So I decided to take a career change, my career path, let's say. Fidelity ended up in West Africa, Sierra Leone, working in microfinance with Kiva. People might be familiar with the crowdfunding platform. For microfinance, spent a little bit of time doing that, and then was really interested in Latin America, which is what brought me to Ecuador. And I've been living in Quito now for almost 5 years and working with IMPAQTO.
That's awesome. So how do you like Quito? How is life in Ecuador as an expat?
It's great. Ecuador is a gorgeous country. It's small, but it has really some of the most amazing nature that I've seen. I mean, people talk about Ecuador has the four different regions in a very small country. The Andes, Quito is at the capital is at 2,800 meters or over 9,000 feet up in the Andes Mountains. We have the Amazon, we have the coast, Pacific coast, and the Galapagos Islands. So Ecuador has a lot to give, and Quito is a great city.
So what made you hone in on Ecuador then? You traveled around, you worked in West Africa, and you ultimately decided on Latin America. Was that a business decision because of the venture scene, or was it a personal decision? You love Ecuador. What really got you to settle in South America?
Yes, there were kind of two phases to that decision. The first was the interest in Latin America more broadly. And that was kind of a combination of both the professional and business kind of opportunity and also my personal interest. I traveled a little bit around Latin America. I really liked the region, spoke Spanish, and also saw what was happening in the venture capital ecosystem in Latin America and thought it was really exciting. And that's kind of what got me interested in the region. Ecuador specifically, actually, ironically, I didn't choose Ecuador. I was looking for opportunities throughout Latin America, talking to people doing interesting things throughout the region, and ended up getting introduced to Danielle and Michelle, the co-founders of IMPAQTO. And we were talking, and I really liked what they were doing, and it fit with what I was looking to do. And they hired me to come down and work for them at that time at the accelerator part of IMPAQTO. And now, of course, I'm running our impact investing fund. So it was really the job that called to me, and Ecuador was a great bonus and unexpected positive experience.
Yeah, that's so cool. Because if I was going to guess where would a foreigner find a venture capital job in South America, I'd guess Brazil, Mexico, or you're not going to find one, right? So that's why I'm really excited to talk to you today, because it's the lesser traveled or lesser followed venture capital market. So let's talk about them, I guess, one by one. So you guys at IMPAQTO focus on the Andean region, which is Ecuador, Peru, Colombia, Chile, Bolivia. So I'm curious to hear your perspective on each market. If you could take it one by one, I guess. Want to start with Ecuador? I mean, what does the venture capital scene look like in Ecuador?
Sure. I guess maybe to kind of level set across the five markets that we invest in, maybe actually even taking a step back, let's talk about venture capital in Latin America.
Sure.
So, Latin America has, I believe, 28 countries, if I'm not mistaken. When you look at the venture capital market, this year it'll be about $4 billion. That's significantly over the past couple of years. 60%, 60 to 70%, depending on the year of the capital that's invested in venture capital in Latin America goes to Mexico and Brazil, the larger markets that you mentioned. And then you have a pretty big fall off after that. So when we talk about the markets where we're focused in the Andean region, Colombia and Chile are the more developed venture capital markets. Peru is an up and coming market. Ecuador has really interesting things going on, but is smaller, and Bolivia is a more nascent ecosystem. So that people kind of have an idea of how these ecosystems compare. Ecuador, living in Ecuador, and also as you mentioned, I think at the beginning, I'm president of the EcuaCap, which is the Ecuadorian Venture Capital Association. We do a lot of work to promote the Ecuadorian venture capital ecosystem, and it's ecosystem with a lot of talent, with a lot of interesting startups, mostly early stage. And we've won one unicorn in Ecuador, Kushki, which has raised some big rounds over the last couple of years. And then there's a lot of kind of up and coming startups that I think we'll have a lot of interesting news from over the coming years.
Okay. And then what's it look like once you start to get past the early stage venture capitals? Are there funds focused on, later stage venture capital in the Andes, or much less so?
There's not a lot of funds focused specifically on the Andean region in terms of later stage venture capital. There, what we see tend to be international funds, whether they be regional or often global funds that are coming in. I mean, the venture capital market in Latin America in general, kind of local funds tend to get you up to Series A. And once you're talking about Series B and beyond, there's really not a lot. Brazil has more of those later stage funds than other markets. But outside of Brazil, there's not a lot of local funds. And then you're really talking about raising large rounds from a combination of maybe some smaller tickets from local funds and larger, more global funds. So it's really the focus is on in the Andean region. Most of the opportunities are kind of in pre-seed, seed, pre-Series A, and then a select number of companies that are kind of at that Series A point.
Interesting. So then moving forward, the next 5 years, do you expect the two major Andean venture capital scenes that you mentioned, Colombia and Chile, to continue to be the best opportunities or the most robust ecosystems, or do you think Ecuador, Peru, maybe Bolivia can catch up?
Yeah, I think the growth that we're seeing in Ecuador, Peru, and Bolivia is definitely significant over the last couple of years. Whether you measure that in the number of startups and the amount of capital raised, of course, there's cyclical elements here, but kind of talking about the secular trends, the interest. Kind of, there's a big cultural component to entrepreneurial ecosystems, and it has to do with entrepreneurs choosing the entrepreneurial route instead of going to work with a stable salary at a big company, which is a big cultural consideration. And so I think we're seeing a lot of those kind of the baseline progress that in those markets that are earlier stage that will help them to grow. Also, more and more ecosystem actors. There are new venture capital funds that have opened in all of those markets over the last couple of years. Accelerator programs that are growing or that have recently been created. And so those are kind of the components that you need to have ecosystem growth. So I'm really optimistic, and the reason that we're focused on the Andean region, not just some of the more advanced markets, is that we see a lot of opportunities in the more nascent entrepreneurial ecosystems, and we're really optimistic about the growth that we'll see there.
Yeah, I'm interested you make the cultural point too, because there's a venture capital report by Atlantico. Maybe you've seen it. They put it out every year. And there's a chart in there with a survey of Brazilian graduating students, and it shows like what's the most desirable job or what's your dream job. For the first time ever, it was, founder or startup, which is just a huge cultural shift. When I first got to South America over 10 years ago, where it was, I want to work at a bank, I want a secure government job. So which countries in the Andes do you really see that culture starting to take off, where startups are a thing?
I think it maps pretty closely to systems where more capital has been raised. And I think that's sort of natural, because how is that culture created? Seeing success stories is really powerful. And so where you have markets where there have been startups that have raised significant rounds, startups that have founders that have had exits, and you have that angel investment capital also going through. Those sorts of dynamics are really important to get people excited about entrepreneurship and to accelerate that cultural shift. I mean, maybe in Ecuador, here in Ecuador, one interesting dynamic we see is that if you go to the universities, entrepreneurship related classes tend to be the most popular classes. And so there's a lot of interest, but then it falls off because a lot of people choose, it's a very difficult economy. It's a difficult job market. 70% of people in Ecuador are either informally unemployed or informally employed or underemployed. And so the promise of a stable salary job from a large company versus the risk that you take by being an entrepreneur, we're not seeing the number of people coming out of universities and going that route. I think Brazil is probably an example of in a lot of ways of where hopefully the whole Latin American ecosystem goes over time. But I think we're going down that path.
Yeah, one of the aspects I hear mentioned all the time with the Brazil ecosystem and why it was able to gain so much traction is that the large companies really embraced corporate venture capital in Brazil. They opened accelerators, they opened co-working spaces. So what does corporate venture capital look like in the Andes?
Yeah, it's growing. It's definitely, the development depends on the country. Again, I mean, Chile is probably the most advanced market. I would say you see a lot of corporate venture capital and an understanding of the benefits that brings to the company. Colombia also has some important corporate venture capital funds. In Peru, you've seen a lot of growth in the last few years. Companies that have started corporate venture capital have become important ecosystem players. Ecuador and Bolivia are definitely kind of the laggards in that sense, in that there's still a mindset of competition, I think, with startups of, trying to avoid, trying to protect the large companies, trying to protect, whether it's from a regulatory perspective or competitive, business actions, competitive dynamics, trying to protect their turf from the startups, rather than seeing how the innovation that startups bring can be beneficial to the companies. And so I think you've seen some interesting steps, initial steps being taken in Ecuador, for example, with a couple of companies kind of starting to go down that path. I think an expert, someone who has a lot of experience in corporate venture capital once told me corporate venture capital is the end state. But along that path, there's first, open innovation challenges. There's a lot of ways to connect with startups before you're get to the point of investing in startups, and that's where we're kind of starting to see more interest from corporates.
Oh, it's really interesting. Yeah, so you mentioned Chile, and you reminded me of a program that they used to run. I don't know if it's still a thing, Invest Chile. I remember it being maybe like 10 years ago, where they were kind of like trying to attract digital nomad types, like foreigners, to start up a company in Chile. And I think they were giving visas and maybe even a little startup capital. So is that program still a thing?
Yeah, Startup Chile still exists, funded by Corfo, which is the economic development agency of Chile. And Chile has an interesting case study of having a lot of government money involved in the entrepreneurial ecosystem. And there's both good and bad that comes with that, which is probably a conversation for another day. But Chile has from a public sector perspective, has made that effort. And Startup Chile, we have some of the companies a few of the companies that participated in IMPAQTO's accelerator have then gone on to participate in the Startup Chile accelerator program. They have a couple of different programs depending on the stage of the startup, and that includes grant, non-reimbursable grant funding, equity-free grant funding for the startups. Comes along with a commitment to live in Chile for a certain amount of time during the program and to open operations in Chile if they don't have them already. So it's an interesting way to kind of promote the ecosystem. The Chilean government also, through Corfo, invests in venture capital funds and has created an interesting ecosystem of venture capital funds in Chile through that government support. That's probably one of the most involved governments in Latin America in the entrepreneurial ecosystem, and whereas a lot of others don't really talk much or think much about startups and venture capital.
Yeah, that's a really unique program, right? It's a really cool offering, right? You can get a grant if you're an ambitious, young startup in Europe or the US. You can get a grant to go move to Chile. You get the visa taken care of to live there. You learn Spanish, you learn a new market. It's pretty exciting. Would you say it's been a success? I guess, have there been good startups or relevant companies that came out of it, or less so?
I think it's been a success in developing the ecosystem. I'm probably not close enough to the success stories of companies that have participated in Startup Chile. The program has led to startups that are able to raise subsequent rounds and be successful over time. I would say what we see is almost significant percentages a significant percentage of the companies we talk to in Chile, as we're looking at deal flow, have participated in Startup Chile. I think probably what's been less successful, maybe from my observation, is having entrepreneurs from other countries in Latin America or globally then stay after the program, stay in Chile and continue to have that impact in the ecosystem.
So they come and then kind of after the 2 years is up or whatever it is, they go on their way. The startup didn't really gain traction. Makes sense.
I think that's the most common outcome. Although I think that there are positive elements of bringing that talent, international talent to a local ecosystem, and I'm sure that there are ongoing benefits of the knowledge and experience that stays with that.
The ecosystem still gets the benefit of having people from all over the world come in and spend 2 years and work, right?
Yeah, exactly. Yeah, and actually, Peru has been kind of the government is getting more and more involved in the ecosystem, and we have a couple of startup graduates from IMPAQTO's accelerator program, Ecuadorian startups that have won grant funding to open operations in Peru and are in that process now. So it's a little bit of a different format. It doesn't have the full kind of program element that you have in Chile and Peru. They're using local independent incubators to support those startups, but they are providing the grant funding to open operations in that country.
Awesome. So I think that's a great segue too, because you mentioned IMPAQTO's incubator or accelerator program, and then also there's IMPAQTO Capital. So maybe you can just talk a little bit about IMPAQTO, the two different paths you guys have, and what kind of companies.
Yeah, sure. So IMPAQTO was founded over 9 years ago by two Ecuadorian women, Daniela and Michelle, really with the goal of supporting entrepreneurs with a particular focus on social impact entrepreneurs. First, with a focus on Ecuador, and then really today, IMPAQTO has a reach throughout Latin America. So that ecosystem builder part of IMPAQTO that's grown over time, has the largest network of co-working spaces in Ecuador and does ecosystem events in those co-working spaces, has this accelerator program, IMPAQTO Lab, that I've mentioned, which is an equity-free accelerator program, but over 300 companies from 12 countries, I believe, in Latin America have participated in the program. Also organizes the main impact investing event in the Andean region, which is called CLIck. So there's a lot of kind of ecosystem building activities within IMPAQTO. IMPAQTO Capital, we created as a spinoff. Michelle Carpenter and I, my partner and co-founder of IMPAQTO Capital, we created as a spinoff of IMPAQTO, really kind of filling that last piece of the needs of entrepreneurs, which we saw a lot of gaps in the access to capital. And that's why we created IMPAQTO Capital. And that's my primary focus today, but we leverage kind of the network and an experience that IMPAQTO has in this ecosystem builder.
Okay. So for the capital arm, are you exclusively investing in accelerator companies, or no? Do you also source from companies that don't go through the accelerator program?
We source broadly. We do look at companies that graduate from the accelerator, but we are looking at companies from all over. And we have our first three investments that we've made. We're a fairly new fund. I'm sure we'll get into that. One of them is an accelerator graduate that we've known for almost 3 years through that, and the other two are companies that arrive to us in other ways.
Yeah, I definitely want to ask you about a few of the case studies, but before I want to ask you about sourcing. So the beginning. So what types of companies, because I understand it's not a startup builder, right? So you get existing startups that apply to the accelerator and then you accept them and you put them through the program. So what types of startups do you see mostly? Is there any insights you can give into common characteristics of startups in the Andean region? No, is there certain industries that are more common, anything, cap tables? What does it look like for a typical applicant?
Yeah, sure. So we're within IMPAQTO Capital, we're focused kind of on a subsegment of the Andean region ecosystem, which are startups with the social environmental impact. So if you look at the ecosystem in the region, and this is true for Latin America, kind of the largest verticals are fintech, e-commerce, and logistics. We tend to play less in those sectors. We're focused on kind of some of the up and coming verticals, which have been some of the fastest growing verticals in Latin America. So we're focused on education, health, agriculture, and climate and environmental solutions. And so if you look at kind of what the trends are throughout Latin America, there's not great data into the sub-region, but ag tech, ed tech, health tech, and climate tech are some of the fastest growing verticals, and we see a lot of opportunities in those verticals, and that tends to be where the business model of the startup has this natural social impact as part of what they're doing, or environmental impact in the case of climate tech, and so that's where we play a lot in those sectors.
Yeah, they're all across, even in Brazil and Mexico. I think those sectors are wildly underserved by VC. It's so fintech focused. Brazil's the largest agro economy in the world, and it's like 4% or 5% of VC goes to ag tech, which is kind of mind blowing. So, do you think the Andean, any specific country, maybe has a unique advantage in any of those four sectors? Like, is there any reason to think that, ed tech in Colombia has an advantage over maybe other emerging markets or any other country in the region?
It's a good question. I think the dynamics of each country vary a little bit. So Ecuador and to Peru as well, I would put in this bucket, kind of being in the heart of the Andes, has really interesting opportunities in agriculture and ag tech and the food supply chain in general, because there's a high percentage of smallholder farmers. There's also a lot of unique agricultural products. So quinoa is always a good example that has had a boom over the last couple of decades in the US and globally. But there's a lot of other kind of similar superfoods, whether it be amaranth or yucca, or other products like that really only exist in the Andes. And so there's interesting opportunities there just because of the geography. I think in climate tech as well. So of the countries that we invest in, Colombia, Peru, Ecuador, and Bolivia have part of the Amazon rainforest within the countries. And so there's a lot of the biodiversity in the Andean region is extremely high. I've forgotten the number, but I think Latin America has something like 40% or 50% of the world's biodiversity, being obviously much less the world's land or the world's population. And so there's a lot of, when we talk about climate change and leveraging technology and innovation to try to mitigate climate change, there's a lot of interesting opportunities in the region because of those geographies. So I think there's some unique aspects of the Andean region, and rather than there necessarily be a really key advantage in one country or another country, I think it's kind of, so there's some regional trends that are really interesting.
Yeah, that's really cool. So let's talk a little more about the fund then. You mentioned, you're a new fund, and one of the things that stood out to me when I was preparing for this is that you invest in revenue-based financing instruments rather than an equity position. So can you just talk a little bit maybe about the fund, why that's the strategy opposed to a traditional equity-based strategy, and ticket size, whatever you can offer?
Yeah, sure. So we invest generally in seed stage companies. Ticket sizes are between $50,000 and $200,000. And I mentioned that IMPAQTO Capital is a fund, is a spinoff of IMPAQTO, this ecosystem builder, and that was really a key. Brought us some key insights because we as an organization have been working in the ecosystem for almost 10 years, and we saw some key gaps in the options for raising capital for entrepreneurs. And so our revenue-based financing, for those who don't know, is in our case revenue-based loans specifically, which are loans that we provide to the company. They're collateral-free loans, and the company pays back based on a percentage of revenue rather than paying a fixed interest rate. And so it's non-dilutive capital, which is really important. Provides flexibility because the paying a percent of revenue means that the payments are linked to the performance of the company, whether if the company has a bad quarter or bad year, the payments are less. And also that as the company grows over time, that startup is paying more of the payments are back end loaded because it's based on a percent of revenue. And so the startup has the ability to kind of grow into the payment of that loan. So if we look at the funding spectrum and funding options for startups in the region, venture capital, of course, is growing quickly, but it's still fairly small. And we see a lot of companies that aren't able to convince venture capitalists that they can be 10x, 20x companies. And the stat that I always hear in the US is that 2% of companies raise venture capital. I'm guessing in Latin America, the number is less. So there's a lot of companies that might have really attractive growth and attractive prospects, but if you don't necessarily have the exponential growth and also the willingness to have an exit, which is another thing we see entrepreneurs who don't necessarily want to go that route. And if you raise venture capital, they're generally looking for an exit. So kind of creates an opportunity for other types of capital. If you look on the other side of the spectrum in the region, who would be the more traditional debt funders, the banks? The banking system is very oligopolistic, not very competitive. The terms are very not very attractive, let's say, for entrepreneurs. And so most startups aren't able to get bank loans, or they have to put out a personal guarantee to get a bank loan. And it doesn't provide the flexibility that a startups need. So this mezzanine capital, its revenue-based financing, is kind of in the middle of that spectrum as mezzanine capital. It's non-dilutive, which is attractive to a lot of entrepreneurs because we do also see a lot of broken cap tables in the region from, unfortunately, unsophisticated angel investors who take very high percentages very, very early, and then VCs then aren't able to invest. And so having an option for non-dilutive capital with flexible payments, with no guarantees, and an alignment between the fund and the entrepreneur, we see as a really interesting option for a lot of companies. And there's a lot of very good feedback in terms of all the conversations we have, both in the companies we've invested in, the companies we haven't invested in terms of interest in other types of capital beyond the kind of more traditional ones.
Yeah, that's interesting. You mentioned the bad angel investors, because that's a problem I've heard echoed throughout venture capital in Latin America. They'll buy a convertible, and then things start to go bad. Right when the company needs the cash, they'll try and convert and sell the equity, So that's an interesting problem. But I want to push. You mentioned again. I want to push on that thread the insights that IMPAQTO has from years of running an accelerator in the region. What are some of the other gaps or peculiarities? What else have you learned about the startups in the region or the economy in the region by running the accelerator?
Yeah, I think there's some unique challenges and opportunities in the Andean region. In some of the smaller markets, and Ecuador is a good example of this, in order for companies to reach a decent scale, they really need to be thinking regionally from the beginning. And that is kind of, Ecuador is a really good market for testing out an idea and kind of getting that initial traction and showing that it works, and then taking that and scaling it in other markets. And that requires also the right mindset from entrepreneurs, which I think is part of this cultural evolution that we've talked about. Is that sometimes, in our accelerator program, we talked to companies who would say, "Oh, I want to be the best company in this industry in Ecuador." It's okay, but you need to think regionally, because if you're the best startup in that industry in Ecuador, you're not going to get to the scale that you need to get to. So one of the dynamics in the Andean region are smaller markets. It's generally harder to access capital. There are fewer local funds, and a lot of the regional and global funds are looking at the smaller markets. And so we see a lot of bootstrap companies and entrepreneurs who are very creative in being able to reach a good level of traction being bootstrapped. And a piece of that also comes from this angel investor dynamic that we touched on, where there's not really very well developed angel networks in a lot of the region, and that makes it difficult because pre-seed funding for startups is very hard to come by. There's not a lot of VC funds in Latin America that invest pre-seed, and that usually comes from angels in other regions. But if the angel ecosystem isn't developed or isn't behaving nicely with these kind of broken cap tables that we see, that makes it difficult for startups. So I think kind of challenges, this regional opportunity and need to think regionally, challenges in the access to capital. And also there's, depending on the industry, there can be interesting, regulatory dynamics where if you're playing across a few different countries, you have to deal with different legislation and different regulation, and that can vary a lot. Even in a small region that has a lot of similarities. Whereas a startup that starts in Mexico or Brazil, they can get to a really significant scale staying in one country. And that's definitely something we see different in the Andean region, where you have to be thinking regionally and that thinking about kind of the dynamics between different countries and how you can deal with that.
Yeah, right. It's a unique problem because you have to do compliance, marketing, all in 3 or 4 countries, right? And even though people assume it's Spanish, they are culturally different, right? Like what works marketing in Bogota and Santiago, Chile aren't necessarily the same thing.
Yeah, and that's actually an interesting dynamic that I've talked with a few founders recently about. What you see in Latin America is that a lot of the funds, Brazil tends to be, unfortunately, a little bit separate from Spanish-speaking Latin America in terms of the ecosystem because of the size of the market, because of the language difference. And so, thinking about Spanish-speaking Latin America, specifically Mexico is the largest market, and also has the most large number of large venture capital funds of any market. And what you see from a lot of entrepreneurs who want to raise money in Mexico, the funds there will say, well, once you've showed you can have traction in Mexico, then we can have a conversation. And that leads there to be this kind of movement from countries like Ecuador, Peru, Colombia to Mexico. And every startup in Spanish-speaking Latin America is trying to open in Mexico. And Mexico, in addition to being just a different market with different dynamics, is also a more competitive market because of this, because there's all the local startups and there's all these startups from the region they were trying to enter. And we've seen some startups who have struggled, quite a few who have struggled to successfully open Mexico. And it also invites this conversation of, well, why there's pros and cons, but an alternative to going and opening Mexico as your second country is to say, well, if you started in Ecuador, Colombia is a country of 50 million people. Peru is a country of 30 plus million people. You're not at the size of Mexico, but you can kind of open some of the medium-sized markets and have pretty good traction in the region, and maybe have a more solid base before going into Mexico. So these are kind of some of the dynamics that come out of the nature of the size of the countries here.
Yeah, that's really interesting that maybe an Ecuadorian startup that could do very well in Ecuador and Peru doesn't do as well because they're forced to go and open Mexico for funding, but they don't necessarily know how to operate in Mexico. That's interesting. So yeah, okay. So did you teach in the accelerator program? Like, were you actually like every day you would go through with the startups? Like, what does that look like when you're working there? I'm curious. Like, were you like, is it like a college professor type thing, or how's that work?
Yeah, so I originally joined IMPAQTO to run the accelerator, and it was sort of in this redesign phase. So I kind of helped to bring it to the next level and was running the day-to-day. And I did that for about 2 years. And then when we decided to raise a fund, then I transitioned to IMPAQTO Capital, where I am now. So I spent 2 years running the accelerator on a day-to-day basis, and really loved the experience. I mentioned my background. I hadn't worked with startups in Latin America before. So I learned a lot from the process and also had hopefully a perspective, interesting global perspective that might have been a little different. But understanding the needs of startups and how to design a program that touches on the most important topics, and how to design a program that can be relevant to a cohort of 10 or 15 startups so that everyone's getting something out of it. And what are the most important topics, and how do you create a mentor network and a mentor program that also allows these startups to have this one-on-one work with mentors. That was it's a challenge, and it's not easy to do, but it was something that I learned a lot from that process. And then I taught a couple of the particular sessions, a lot of things related to, or based on my background, things related to unit economics, finances, financial management, and capital raising. So I kind of had this dual role of organizing the program and finding the best facilitators for a wide range of topics, and then teaching some of the topics myself. And I loved it, and I continue to running a fund and investing in startups continues to involve a lot of mentorship and a lot of working with founders, which is something I really love, and was a great element of that time in the accelerator.
Yeah, that's really cool. So tell me, I want to push on a little more. Like, how long is the program, and then what's like the syllabus, or what would be like major classes? Let's call them. Like, is it economics, marketing? Like, what's the curriculum look like, and how long is the program?
Yeah, so and the programs continue to evolve over time, right. But it's a 3.5 month program. The kind of divided into a few different modules. So the accelerator starts with kind of strategy and business model, kind of the core of understanding the market, understanding the opportunity, and creating a business model around that. It goes into kind of more product development, UX, UI. And kind of product refining and based on customer feedback. Then marketing and go to market is one of the modules. So marketing, sales, what the go to market channels are, and how to figure that out. And then the last module is finances and capital raising, and which involves both the how to get your finances in order internally, which I personally think is something that startups is a weakness for most startups. When they would talk about money, they tend to say, "Oh, I want to raise capital," but if you don't have your finances in order, you're going to have trouble raising capital. So kind of that was the first topic, or is the first topic in that module, and the second topic is more capital raising, how to talk to investors, give a pitch, and run those processes. So the idea is really to give this overview of the most important elements of growing a startup and having success.
That's awesome. I like it. So let's talk about then some of the companies that maybe came out of it or a case study that Impacto's invested in Impacto Capital. Let's talk maybe about a few specific companies if you could. I'm curious.
Yeah, sure. So one of the companies that in our portfolio in IMPAQTO Capital is a proving company called ELSA. They provide they have a software platform that companies use to help reduce the incidence of sexual harassment in the workplace. So the platform surveys employees and understands creates a diagnostic understanding the risk points and kind of what the knowledge level of the inside the company is, and then processes that data and creates a recommendation and action plan so that companies can implement that. And companies that use the product see a 60% reduction in incidents of sexual harassment from before and after using the product. So really a big problem and a really unique solution within that market. And they're growing very quickly, mostly in Peru. Now we're actually helping them to enter Ecuador as well, but they have customers in 4 or 5 markets in the region, and have a really strong founding team that we're really happy to support.
Okay, and that was a revenue-based investment, right? So that wasn't equity financing; it was along the lines of what we talked about earlier.
Yeah, exactly.
Okay, so I guess
I guess one point, maybe just I think one point I didn't talk about on our revenue-based financing, how it's structured. So we're generally investing for 4 to 5 years. So there are revenue-based financing funds or fintechs that are providing revenue-based financing for 3 months or 6 months, and so the dynamic is very different. I mean, we're investing for the medium term, and so although we're not investing in equity, we kind of act similarly to equity investors in terms of supporting the company, in terms of the engagement, and so that's kind of part of what the process that we've worked on with ELSA as well.
So I'm curious then what it's been like for them when they reach out and talk to corporations, because right, like we talked about corporate venture capital in the region, and this is a product that is for bigger companies, right? The more employees, the more likely they are to use it, I would assume, right? So what has it been like for them then when they go and talk to companies? Hey, we're a startup. The companies, is it just a commercial decision for them? Are they interested in the venture part of it? What's it been like for them talking to big companies?
Yeah, I think the sales cycle to corporates in the region doesn't necessarily the fact that it's a startup making a sale and kind of interest in venture or that sort of dynamic on the corporate venture capital side doesn't necessarily come into play, and it's more of just your typical kind of sales conversation, and that's what we've seen with them. They really see kind of 2 motivations that causes corporations to buy the product. The first is that this push toward kind of sustainability and healthy work environments, which can sound kind of intangible, but is definitely a real trend in the corporate world. And you're seeing that pressure coming for companies that are publicly traded, for example, which they have some interesting clients there. You see that coming from their shareholders who are investing and kind of pushing companies into that. And so you have kind of that motivation. Then you have a second motivation, which they're working on educating the market about this, and it is growing over time. And that's that sexual harassment is actually, from an economic perspective, hits companies really hard. And it's often an unseen impact, but victims of sexual harassment are more likely to miss work. They're more likely to have lower productivity. And so there's, if you calculate the economic impact, it's really huge. And the investment that a company makes in a SaaS license for ELSA is really small in comparison to what that economic impact is. Oftentimes the problem is that the company doesn't know. Companies will say, well, this has not happened in my company because there's problems where reporting is generally sexual harassment is heavily underreported for various reasons. And so until they implement ELSA and see the data, they don't really know the full extent and the economic impact. So there is a clear economic return from using ELSA and avoiding sexual harassment. And so that's kind of the second piece of the motivation and something that we're seeing more over time.
Yeah, that makes sense, right? Finding, hiring, and training good people is expensive. So if you have them in, you don't want to lose them. So what else? Is there another company maybe we could talk about? Another one in the portfolio or the incubator?
Yeah, sure. So another company in the IMPAQTO Capital portfolio is called Fibraso. They provide fiber optic internet in poor urban neighborhoods where the traditional internet providers don't offer service because the capacity to pay of the customers is not there, and so then the costs are much higher for the traditional providers. So they provide fiber optic, do the last mile of the fiber optic to these neighborhoods and provide a very reasonably priced home internet service. Most of these families, poorer families, are using data on their cell phone as their access to the internet, but that's much more expensive and limited, of course, in the number of gigabytes that you have as compared to Fibrazo service. And they've innovated, they have a flexible business model, flexible payment plans where it's kind of pay as you go, basically, for home internet. So what happens with poor communities is that poor families is that the income tends to be very volatile. So you're not receiving a check. They're generally unemployed or informally employed and receiving income kind of on a day-to-day basis. And so they don't necessarily have the money to pay 30 days at a time as you would a traditional internet provider. But with Fibrazo, they can pay 7 days, they can pay 15 days. There's no contracts. And if they don't pay, they don't have internet service for that time that they haven't paid, but there's no fees, there's no fine. And so that flexibility is really important. And that's an interesting example of the adapting services and products to the unique nature of lower income communities. And they've done a really good job of that and are growing very quickly. They have operations in Argentina and in Colombia.
That's a really cool company. So I'm assuming they can't do it cheaper than the major internet providers, but their differentiator, I guess, is their collection process. So what they do is
it actually is cheaper. It actually is cheaper. So their average in Colombia, which is their focus market, it's $15-16 a month is the average price, which is significantly cheaper than the traditional internet providers don't provide it in those neighborhoods, but is cheaper, than what they charge elsewhere.
Is their cost per mega, whatever the bits is it cheaper for them to produce than the major internet providers, or no? They still have margin, but it costs them a little more to get it to the poor neighborhoods?
They are doing just the last mile. Okay. So they're leveraging the wholesale kind of fiber network in terms of the cables, the undersea cables, and what is provided to the closest connection point to these neighborhoods. And so they're avoiding a lot of the kind of legacy costs that the traditional providers have. And they also have an agile go-to-market strategy with like WhatsApp is of course the main channel of communication in all of Latin America. And so doing sales through WhatsApp and being able to go to door where it's needed and have a lot of word of mouth within these neighborhoods where there's a lot of people talking within each other. So they have lower costs kind of in a few different aspects of the business that they're not competing on price because they're with the traditional providers, at least because they're not playing in these neighborhoods, but it allows them to have a lower cost structure.
Okay. And then it's all on an easy app, I guess. They pay on a phone app, or what's the user experience like?
Yeah, so payments is actually an interesting dynamic there because you have a lot of unbanked in these poor communities. You have a lot of unbanked people, and so they provide a wide range of payment options, which can be through more traditional channels if someone has a credit or debit card. But then you can also have a network, they leverage the networks of agents. So there's generally an infrastructure of the small store owners in these neighborhoods in Latin America will have, whether it be the banks, which will often use them as agents for their services, or Fibrazo that's using them as agents that can accept payment in cash. That then the store owner kind of does the back end there, and so having that flexibility and different payment options is really important when you're serving low income populations.
Yeah, that's really interesting. It's an interesting company. So I think that was a really interesting conversation. Anything we didn't cover about IMPAQTO or the region that you think listeners should know before we finish up?
I mean, I think there's for those listening who are interested in Latin America, investing in Latin America, or involved in the Latin American startup ecosystem, I recommend that everyone pay more attention to what's going on in the Andean region, and particularly kind of the smaller and more earlier stage markets within the region, because there's a lot of interesting opportunities. There's a lot of talent. There's a lot of potential in these startups, and there's a lot of startups that are really growing quickly. Also have a really strong social impact, and we just think there's a really underserved investment opportunity in the region.
Awesome. And where can people follow you, find your work, learn more about IMPAQTO, the accelerator program?
Yeah, so our website is impactocapital.com, Impacto with a Q, and that people can see more information about what we do there. People can look for me on LinkedIn, Justin Schwartz. I'm fairly active on LinkedIn and generally respond when people send me messages. So that's a good way to get in touch with me.
Awesome. And I will link all that in the show notes for anyone that wants to find out more. Thanks for doing this, Justin. I really appreciate it.
Thanks a lot, Patrick. I really enjoyed the conversation.